Here is how you actually make over $250 per day trading or scalping the Forex, crypto, or stock market. Hello traders, today we will be going over a strategy to actually make over $250 per day. Before we start, if you are interested in trading crypto with leverage and getting an over $4,300 bonus, check out the link in the description of the video. Now that we have gotten that out of the way, let's go over how you can make over $250 per day, scalping or day trading with little capital. So to make the $250, we first need to figure out how many trades we should be taking every day. We also need to calculate how much profit we need to make with each trade. We have found that taking 1 to about 2 trades per day is realistic for most people because you would probably need to quit your job if you were taking 10 trades per day. From what we have seen, the best time frame for taking about 1 to 2 trades per day seems to be the 15-minute time frame, so we will be using the 15-minute time frame for this video. Now let's take a look at how much profit we will need to make and what strategy we will be using to make that profit. Most retail traders don't have much capital to start with, and so they use leverage to increase their exposure to profit. However, always keep in mind that this will also increase the risk of liquidation. The average crypto scalper uses anywhere from 5 to 50x leverage, so for this video we will be using 10 to 15x leverage since this seems appropriate. So assuming we start with $1,000 and we use 15x leverage, we will need to make 1.6% per day or around 1 to 2% per day. We now know exactly how many trades we should be taking and around how much profit we should make per trade, but what strategy will we be using to enter into positions? Let's head over to TradingView and show you exactly that. We will be using an adjusted Gaussian moving average, or GMA for short. This is an indicator that is based on the Atr Gaussian filter and can be used for smoothing. The GMA rejects high frequencies, which are fast movements in the market, better than an EMA, and it has lower lag. The Atr Gaussian filter was published by John F. Ehlers in Rocket Science for Traders, and it was first implemented in Wealth Lab by Dr. René Koch. In short, the GMA is a 1 to 4 pole Ehlers Gaussian filter with standard deviation filtering, and it should perform similarly to the Ehlers-Fisher transform. Overall, it's a great indicator that in some cases functions a lot better than the regular EMA that nearly every strategy uses to indicate trend direction. As I said previously, we also see that the GMA filters out undesired high-frequency components, therefore the smoothers are called low-pass filters, and they all work by some form of averaging. We will be using this indicator in combination with other TradingView indicators that we will be using as confirmation. This will make it so that the strategy becomes a lot more profitable. Whenever you are trading with just one indicator, there will be a higher chance that the signals that are shown are false. So let's go ahead and add these indicators to the chart. First, head over to TradingView and change the time frame of the chart to the 15-minute time frame. Now go to the Indicator Search tab and search for the Gaussian Moving Average indicator. Select the indicator made by locks and add it to the chart. Now let's add the second indicator to the chart. Search for the Atr Bands Indicator, select the indicator made by Alexander TH and add it to the chart. The last indicator that we will be adding to the chart is the High Volume Candles indicator. Search for the High Volume Candles indicator and select the indicator made by Dima Kiev. Those were all of the indicators that we needed to add to the chart. Now let's configure the indicator settings to help us take accurate entries. First, head over to the High Volume Candles indicator settings. After that, go to the Style tab and change the Low Volume candle colors. After doing that, click on the OK button. Now let's change the Gaussian Moving Average indicator settings. Click on the Settings button and head over to the Style tab. Deselect the bar colors. Also deselect the long and short signals. Now head over to the Input tab. We will be changing the period to 75. When you have done that, click on the OK button. Lastly, go to the Atr Bands indicator and navigate to the Style tab. We will be changing the colors of the lines to make them more clear. Once you have done that, go to the Input tab and change the lower Atr band multiplier to 3. Make sure you do the same for the upper Atr band. Those were all of the settings that we will be changing. Now let me show you when to enter into a position. Let me first show you when to enter into a buy position. The first thing we need to look out for is the GMA switching from red to green. Secondly, the price must be trading above the GMA line. We also need to make sure that the candle that broke through the line was a so-called important candle. If all of the conditions are met, we will enter into a position. We will put the stop loss at the lower ATR band. For our take profit, we will target a 2 times risk to reward ratio. As you can see, this position would have indeed been very profitable. Let's now look at a different buy signal to clear up any confusion. We can see here that the GMA is switching from red to green, indicating bullish momentum. Secondly, the price is trading above the GMA line. We also see that the candle that broke through the line was a so-called important candle. This is the best indicator we could find to make sure that we don't enter a position during a ranging market. As you can see, all of the conditions that we just mentioned have been met, so we will now enter into the buy position. We will put the stop loss at the lower ATR band. For our take profit, we will target a 2 times risk to reward ratio. As you can see, this position would have indeed been very profitable. Like I said previously, entries should not be made during a ranging market. Let me show you an entry that you shouldn't take. As you can see, the market is currently not trending, instead it's moving sideways. This makes it so that our trades will be a lot less profitable. Let me show you an example. As you can see here, all of the conditions were met and we entered into a position. However, since we entered in a ranging market, the profit we made wasn't a lot. It might actually seem like it made a decent amount of profit, but look at how long we would need to stay in the trade. This would make it hard for us to make the $250 per day. Now let's take a look at when to enter into a sell position. The first thing we need to look out for is the GMA switching from green to red. Secondly, the price must be trading below the GMA line. We also need to make sure that the candle that broke through the line was an important candle. This indicated that we pushed through the GMA line with high amounts of bearish volume, which might indicate the price being pushed down even further. If all of the conditions are met, we will enter into a position. We will put the stop loss at the upper ATR band. For our take profit, we will target a 2 times risk to reward ratio. As you can see, this position would have been profitable again. So can we make $250 per day with this strategy? Yes, we clearly can. The strategy shows around 1 to 4 signals per day, and you usually make 2 to about 4% per trade. This means that even if the strategy only had a 50% win rate, we would still be able to make between $150 and $300 if we were to be trading with $1,000 and using 15x leverage. By the way, if you want to trade on an exchange that has some of the lowest fees when it comes to trading with leverage, check out the link in the description of the video. If you enjoyed the video, please leave a like and subscribe to the channel. If you have any questions, feel free to leave a comment.